let's talk about PNB Housing Finance. That's one company which is in focus right now, and we are going to join by Mr. Hardayal Prasad, who's the management and CEO of PNB Housing Finance. The stock is done weakish right now, but overall NBFC and housing finance is on focus of the traders as well as investors. Let's understand how his observations are. Mr. Prasad, let's talk about the collection efficiency and asset quality. Are you witnessing improvement out there? What kind of trends do you see shape up from here on?
So in terms of the asset quality, this has been a reasonably good quarter for us. And especially if you look at the retail, where the push is coming, we have been able to reduce our NPAs by almost about 50 basis points, and the net NPAs in the retail stand at less than 2.5. I think that's a very good story. In terms of the collection efficiency, if you look at it, we are at 98.7%, which is actually almost pre-COVID levels and far better than the quarter one, which is 95.1. This company is extremely unique in terms of its profile of customers, with a strong push on the self-employed. If we go back and see the April and the May, the COVID-2 attack that took place, that was one which have wiped off some of the businesses, and a lot of people have lost their lives. I think that was the reason why we saw increase in our NPAs over there in the first quarter. However, the journey has started. We reduced our NPAs significantly by 50 basis points. The collection efficiency is back. The only thing that that's a little, I would say, not exactly as we would have liked it, is on the corporate book. Though one of the accounts that has slipped in this quarter is one which we had identified, and we had told everybody that there are 3 or 4 significantly risky accounts that we expect to slip. We have allowed only one account to slip. So therefore, the net effect you see is a reduction of only about 8 on the gross NPAs. However, on the retail, the story is very good. And going forward, the way our machinery is working, the way legal channels have opened up, the administration is supporting. It's only going to be a very good story going forward.
Right, Mr. Prasad, the lending in the sector, the mortgage finance sector is actually improving. Industry leaders are also talking about the same. How are trends shaping up at your end? What's your observation on the disbursement side from here on?
If you look at on the disbursement side, we have done a fairly good job in the disbursement with significant increases that we are seeing on the disbursements. We disbursed almost about 3,000 crores during the quarter, which registered a 68% quarter-on-quarter growth. So, and if you look at the YOY, it is 21, but YOY is not a right number because last year it was a COVID. So if you look at quarter-on-quarter 68% growth, the disbursement have started. We will only continue to improve, and we have seen improvement on a quarter-on-quarter and month-on-month improvement on the disbursement. So the disbursement engines have started. We have a strong network. We have a distribution network is very, very good, presence in 65 cities with 95 branches, almost about 17, 18 outreach centers. Our affordable also piece shaping up well. And the degrowth that is happening in the corporate, that also continues. So that is a very calibrated and a very conscious decision that the company has taken. So I think in terms of the disbursements and the disbursement, the company has done a good job. Secondly, I told you that we have arrested the degrowth that was happening. So we have in the last 9 quarters, we have been very different than the industry as a whole. We have degrown.
What about your borrowing costs, and how is that shaping up, and is it likely to be a pressure point also on your margins going forward?
This is the first time where our incremental cost of borrowing has come below 6%. And if you will like to compare, you must compare apples and apples, and we are a AA rated company. We are not a AAA rated company. But within that AA, the way we have been able to negotiate with all the lenders our borrowings that we do, I think coming down below 6 is incremental cost is very good. In terms of overall cost of borrowing, there is a decline of almost 68 basis points, which again is a good sign. So we are seeing a good improvement in the borrowing cost. We have also made some changes in the way we do business, with almost 46% of the acquisition coming from the digital side. We will only see a decline in the cost of acquisition going forward. So this is all going to help the company in improving its numbers, but it is going to take some time. To expect it to immediately start delivering, it doesn't happen. It's only there's a lag effect of the investment that you have done on the IT side, which is going to fructify and start delivering you. And the ability to get very high number comes in because of the digitization that we have done. And we have utilized this period of last about 8 quarters in improving our IT stack. So that is very, very critical from our perspective from all these things that we are going to deliver on it.
Right. Let's talk about your capital adequacy. That's hovering around the 20% mark. The pref issue got scrapped, but I think a rights issue is going on now. What's the thought from here on?
Obviously raising 4,000 crore is not all that easy. While the company stakeholders, which is PNB, Carlyle, and many others, they've been extremely supportive of the way the company is growing as well as its future projections and what it wants to do. So they were supportive and we came out with that issue. Unfortunately, because of whatever reasons, and this is all in the public domain, we have also continuously issued press releases as well as stock exchange releases in terms of what happened and why we had to decide to pull back. More importantly, the company wants to grow, wants to move forward with whatever had happened. Presently, we are capitalized. We are comfortably capitalized at CRAR at 20.66, and the tier 1 is also at 17.82. The very fact that we have decided and we are continuing to lose on our corporate growth gives us the ability to actually build asset 3 times, because the risk assets are almost 3 times available on the retail book.
Right. Let's before we thank you, let's understand what's your business transformation plan from here on.
There are 2 things. One is actually on the digital. So I did touch upon on the digital. The company took advantage of this COVID situation in the last 2 years and has actually improved its IT stack, and it continues to build. It continues to look at the digitization and what all opportunities that are there, new openings, new areas where it can automate. Any area where we find that there is a friction, right from the acquisition side, to the underwriting side, to the risk side, to the servicing side, any area that we find in our business journey, and if there is a friction, we are going to automate it. And we have decided very clearly that this is, and the company has started doing it. Now, in terms of the interventions that we are doing on the project Ignite, which is the transformation journey that the company, we initially in the first few months, we finished off the diagnostic study, which was important to understand that where the gaps are and where we would like. And these diagnostic exercise was done in 4 important areas, which is on the acquisition, how actually the company will grow in terms of the acquisition, customer logins, customer sanctions. And then actually the second journey that we wanted to look at was on the underwriting and the risk piece. How we underwrite, whether there are changes, whether new engines are required, what all is required to give quick decision making with with technology available with us, with more information available, with surrogate information available. The third piece was on the collection, and we wanted to strengthen any company which wants to grow in a lending company. It must have its collection strategy very clearly laid down.
Right. All right, Mr. Prasad, we'll let you go on that one. Thanks so much for your time today. And